Hello, I am Burak Şengül. Along with Selin Demirer, welcome to the weekly market brief we prepared with Yasar Atolye contributions and research. We will again discuss the highlights of the past week and, of course, what you should pay attention to in the coming days. It was quite a busy week, wasn't it?
How about that?
Especially on Friday, Fed Chair Powell's messages from Jackson Hole completely changed the direction of the markets. Initially, everything seemed a bit unpleasant, especially on the tech side. When we look at the S&P 500 closing on Thursday, it had fallen for 5 consecutive days. But then, the Jackson Hole wind blew. Let's take a closer look at how this wind first affected the global markets and then Turkey. What was the main theme of the week? Can this optimism be sustained? Let's lay everything on the table.
Absolutely. The turning point of the week was indeed Friday. Fed Chairman Jerome Powell used a dovish tone in his speech at Jackson Hole, perhaps more than the markets expected. In other words, we can say he gave the green light for a rate cut.
Oh, statement was talked about a lot?
Yes, especially the statement that it may require us to adjust our risk balance policy stance. This strongly indicated the possibility of a rate cut in September. You know, there had been expectations of a rate cut in the markets for months, and this can be said to have created a festive atmosphere.
The holiday atmosphere naturally reflected immediately on the indices as well. On Friday, the S&P 500, with a rally of about 1.5%, nearly returned to its historic high. It closed the week with a 0.3% increase at 6,470 points.
Yes.
Nasdaq, the technology-heavy index, jumped 1.9% on Friday, but still remains 0.06% down for the week. It stands at 21,503 points. But I think the turnaround on Friday was very critical.
Absolutely.
Dow Jones jumped by 1.9% and achieved its first record close in 2025. It's as if Powell's words truly cast a magic wand over the markets.
Exactly. Because the expectation of an interest rate cut means, especially for high-growth potential technology companies that are very sensitive to borrowing costs, it's a very positive development. The expectation that interest rates will fall increases the present value of these companies' future profits. Naturally, it also makes their shares more attractive.
So you're saying that was the reason we saw that harsh reaction on Friday?
Exactly this.
That was already what caught my attention. We saw once again how sensitive they are to interest rates. On Friday, Tesla increased by 6%. Alphabet, Google's parent company, and Amazon gained around 3%. When these giants move, they naturally pull the indices along with them.
It was a very natural reaction. Of course, there's also the bond aspect of the matter.
Yes, what happened to the interest?
ABD 10-year government bond yields were around 4.35% during the week. After Powell, they fell to as low as 4.26%.
This is an important decline?
Important. Because a decrease in bond yields means a reduction in risk-free returns. This directs investors towards riskier assets like stocks that offer higher potential returns. In other words, both the interest rate expectations and the falling bond yields provided dual support for stocks.
So, how did this global wave of optimism reach our shores, Turkey? What happened on the Istanbul Stock Exchange? There were also record-breaking news there.
Yes. It was a very strong week for Borsa Istanbul. The BIST 100 index showed a steady increase throughout the week. It even reached an all-time intraday high on Friday with a value of 11,398.27.
Was the closing also a record?
At the close, 11,362.33 set a new all-time high again. We are talking about a weekly gain of 4.1%. This is a very impressive performance.
So, which sectors stood out during this rise? Or was it a rally that spread across the board?
We can actually say that it has a broad base. Both the banking index and the industrial index closed the week with increases of around 4.8%.
Beautiful.
This also shows us that the rise is not limited to just a few stocks, but is spreading across the overall market. Of course, a significant factor is the increased global risk appetite following Powell's dovish messages. This situation has also positively influenced the perception of emerging markets like Turkey. As you know, when risk aversion decreases, the flow of money into such markets can accelerate.
What is the status of foreign investor interest? Did it support that atmosphere? What do the data tell us?
We see that TL exchange has been made. They also bought shares worth $125 million.
Not bad.
Yes, this actually confirms that the increasing interest in Turkish assets has continued in recent times. With the increased risk appetite following Powell, we can expect this interest to persist in the upcoming period.
So technically, which levels should we pay attention to on BIST 100? We are at the peaks, but how far can it go, or where could support be in possible pullbacks?
Since we are at record levels now, it is a bit difficult to identify a clear resistance above. But psychologically, levels of 11,500 and above, such as 11,600, can be monitored.
Can profit sales come in those regions?
It can come? Yes. In possible pullbacks, the first significant support zone is around 11,300. Further down, the 11,200 level may serve as an important buffer. In other words, the index staying above these levels will be critical for the continuation of the upward trend.
Understood. Let's move on to the currency front. How did the Turkish Lira fare this week? It seems like Powell's wind hasn't been very beneficial for the TL.
Yes, there was some divergence there. The USD TRY exchange rate started the week around 40.85. By Friday's close, it exceeded the 41. It stabilized around 41.01. This means approximately a 0.4% loss against the dollar on a weekly basis. The EUR TRY, however, increased more noticeably, reaching 48.13. The weekly increase there is about 0.8%.
So, what was the reason for this divergence in TL? You know, usually when global risk appetite increases, emerging market currencies appreciate.
There are actually a few factors there. First, the high inflation and interest rate environment domestically continue to put pressure on the TL, unfortunately. Second, Powell's statements weakened the global dollar index, namely the DXY. It even closed flat at 97.7 over the weekend.
Yes.
This situation actually acted as a factor limiting the depreciation of the TL. If the dollar had remained strong globally, the loss in the TL could have been even greater.
You mean it could have been worse?
It could be. The main reason for the more pronounced increase in the euro TRY is the euro's appreciation against the dollar. After Powell, the euro-dollar parity increased by 1%, reaching the 17 level.
I understand.
That is, because the euro has gained more value than the dollar, the euro-TL cross rate has also increased more.
Now let's turn the route to safe harbors. How did the commodities do? I think it was a good week for gold investors, wasn't it? Prices went up.
Yes. Gold had a bright week. An ounce of gold, that is, its price in US dollars on international markets, closed the week with a 1.3% increase at 3,377. This level is quite close to its historical peaks.
Why did gold go up then?
The weakness of the dollar index and the falling US bond yields are the main factors in this rise of gold. As we said, the risk-free return is decreasing and the dollar is weakening against other currencies, making gold, which has no yield, more attractive. Especially with Powell's signals of a rate cut on Friday, this gave an additional boost to gold and pushed it to test 3,377. Of course, global inflation concerns and geopolitical uncertainties have not completely disappeared. This continues to support demand for gold.
Did silver follow the path of gold, or was there a different story this week?
Silver performed even better. The price of silver per ounce rose to $39, with a weekly gain of 2.7%.
2.7% is good.
Yes, this is one of the highest levels in recent times. Now, unlike gold, silver is also an important industrial metal.
Correct.
Therefore, as optimism about the global economy increases, expectations for a revival in industrial demand are also rising. This can sometimes support silver more than gold. Of course, a weak dollar was also positive for silver. In fact, when we look at the gold-silver ratio, which shows how many ounces of silver can be bought with 1 ounce of gold, it has fallen to around 86. This actually confirms that silver has performed stronger than gold this week.
It's time. Perhaps the most lively, most turbulent market. Cryptocurrencies. It seems like a real roller coaster has been experienced there. Bitcoin had a very bad start to the week.
Exactly. Bitcoin experienced a sharp decline from its record level of $124,000 at the beginning of the week. It dropped to $114,000. In fact, when we looked on Friday morning, the weekly loss was over 5%.
Was there a sense of fear in the market?
Yes, we can say there was a sense of unease, but then who came back on stage? Powell.
It seems the wind has turned in the opposite direction again.
Yes, the increased risk appetite following Powell's speech also spilled over into cryptocurrencies. Bitcoin quickly recovered. It approached the $117,000 level again. It closed the week with approximately a 4% loss, around $115,000. So, it recovered a significant portion of the losses from the first half of the week on Friday. This also shows that this recovery once again demonstrates how sensitive Bitcoin, also regarded as digital gold, is to changes in risk appetite. The total value of the cryptocurrency market also rose back above $4 trillion with this recovery.
The situation in Ethereum was even more striking, as if. I read that a record was broken there. Is that correct?
Absolutely. Ethereum had dropped even more sharply than Bitcoin at the beginning of the week. By Friday morning, the weekly loss had approached 7%.
Has fallen quite a bit.
However, the purchases following Powell were so strong that Ethereum reached an all-time high of 4,187 on Friday.
Incredible.
Yes, it almost surpassed its record from nearly 4 years ago. This is truly an incredible comeback. It closed the week very close to where it started, around $4,750. In other words, it is almost unchanged, a sideways movement. After this strong move, some analysts are now already talking about targeting levels above $5,000. Of course, Ethereum's positive divergence is also believed to be influenced by developments and expectations on the platform.
So Ripple, or XRP, there was also a special situation there, wasn't there? There were news and stuff.
Yes, XRP had fallen below $3 at the beginning of the week, but on Friday it gained support from both the overall market rally and its own news flow, making a remarkable jump of about 10%, reaching $3.10.
What was the news then about the 10%?
The news was that 6 major asset management companies updated their applications for the spot XRP Exchange Traded Fund, or ETF. Additionally, there was a positive development in the lawsuit between Ripple and the U.S. Securities and Exchange Commission, favoring Ripple. Naturally, these news items positively influenced investor expectations, and XRP finished the week with an increase of approximately 3% to 5%, around $3.05.
Wow. We've just finished a quite busy and truly active week. So, what developments will be on your radar for the upcoming week, August 25-29? Especially, what should we focus on regarding Turkey and global markets?
If we look inside the country, there are a few important data points you need to follow first. The foreign trade balance will be announced. This data will be significant, both in terms of growth and current account expectations. The July unemployment rate will also be released. We will see the employment situation in the economy. Additionally, there are leading indicators such as the Real Sector Confidence Index and the Economic Confidence Index. These will also provide important signals about the direction of the manufacturing industry and the overall economy. Especially, the trend in confidence indices can give us an idea about the strength of domestic demand and investment tendencies. Of course, the September meeting of the Central Bank of the Republic of Turkey, CBRT, is approaching. Therefore, developments in inflation and exchange rates will continue to be closely monitored by the markets. On the global side, the second revision of the U.S. second quarter gross domestic product (GDP) data will be announced. This will clarify the growth outlook a bit more. But the most critical data of the week will be the Personal Consumption Expenditures (PCE) price index, which will be released on Friday. This is the indicator that the Fed closely monitors when tracking inflation. If the PCE data deviates from expectations, it could cause significant market volatility, especially after Powell's dovish messages. It will directly influence expectations regarding the September interest rate decision. Additionally, towards the weekend, the August non-farm payrolls data expectations will begin to take shape. The strength of the employment market is also as influential as inflation on the Fed's interest rate path. On the European side, the European Central Bank's July meeting minutes will be published. This could provide clues about monetary policy and may impact the euro. Of course, statements from Fed members after Jackson Hole could also clarify expectations for the September meeting. Of course, markets are not only looking at data. Geopolitical factors such as US-Russia relations and the course of the war in Ukraine always remain potential risk factors. Moreover, manufacturing PMI data from China and possible stimulus measures by the Chinese government to boost the economy could also influence global growth expectations, commodity prices, and consequently emerging markets like Turkey. Overall, at the start of the new week, some optimism from Powell might be carried over, but how long this optimism lasts will depend entirely on upcoming data and news flow. I especially think the US PCE data could determine the week's direction.
Yes, it seems that next week, the markets will once again be driven by central bank expectations and macroeconomic data. Of course, we will continue to closely monitor the developments for you. See you again next week. I wish you a profitable week.